Okay, welcome to the Swing Trading with Cycles channel. It is December 20th. We're going to do an update on natural gas today. It's right around noon, so we're going to be looking at some live trading action. Natural gas is plummeting. It's decided it's making its move lower. And we talked about what some of those levels are. We'll review them again today on this video. But we'll also talk about where UNG might be headed and Boyle, because we didn't get a chance to talk about the downside targets for those. So first off, daily chart, we talked about this. So we made a high on day 5. That's what this marks here at $7.10. And we're down here at $5.30. So pretty big drop since then, right? Since that high. Let's just see. What is the... Okay, so we're already down about 25%. Nice. And so we made that high, and then we just kind of consolidated for 3 more days inside this like range. And then we broke down below the range yesterday on day 9. And today is day 10. So we talked about this. It's pretty early in the daily cycle. It's not that late. Like this last one lasted 30 days. The one before that lasted 33 days. This was shorter at 22. Although you could argue this is really 22 plus 24. So it's a 45-day cycle. The point is the downside beckons in terms of time. Now, anything could happen. It could like completely turn around from here. But you'd expect... Actually, let me take off the auto, right? You'd expect something like, maybe we get a bounce soon. And by the way, the broader market is trying to bounce into a DCL, for instance. And I'm not saying that we get exactly to these levels, but that's what you're going to expect, right? Like that's what you would expect, I should say. This absolutely looked like a bull flag in real time, but it broke down, right? Once we broke this range, right? So you could argue that this day we were expanding the range because we had this wick up. So like this is a rally on a lower time frame, but then we just came down and just vomited lower. And let's actually look at an intraday chart, see what's happening on like the hourly, for instance. So, right. So you had this like, and you can just kind of see this how this moves, right? We gapped down, and then we just kind of consolidated, made a move lower, like. These are your consolidation zones, like this here. So we're getting a move down lower here, and at some point we're going to consolidate a little bit. I mean, these have been like, and really these are little bounces, right? But I mean, we're talking about a really feeble bounce. It's just 2.5%. So the same way we talk about a rally on a daily cycle level and a decline after that rally, this is the same thing, except this is on a much shorter time frame, right? This is a little 2% rally, and then we declined. You can kind of think about it that way, right? Like, and then you essentially from this swing low, or swing high, excuse me, you get a decline of 3.5%. Then you get another little feeble rally, and then you get a bigger decline. That's how it's all playing out. And so we talked about in the last video that if it's only day 10, we expect this cycle to be at least 20 days long. That means another 10 days in this cycle. It doesn't mean every single day is going to be a down day, but it means we're going to continue in this kind of stair-step fashion lower. Or that's the expectation. And if we look at the weekly chart, now this is starting to take shape. We had this major low on week 16. So just a flashback. We had a major weekly cycle low on the week of June 27th. You can see it here. It's marked 26 because this whole period was 26 weeks, and we topped out on week 23. Then we rallied out of that low for 7 days. That's what this is. That was our top. Then we printed a swing high once we went below that high, that low, right? This candle marks the high. We went below the low. That's your swing high. And then we made another major low here. And forget the word major. It's a swing low, right? We made a swing low once we went above here. But we only rallied for 4 weeks, and then we started to roll over. So you could argue that this is actually all part of one cycle, like this to here to wherever we land. And we talked about that in the previous, so is this actually week 24 of the same cycle? Either way, we know we're declining in the daily cycle, so we're going to decline for at least another couple of weeks, right? Again, doesn't mean it'll happen in a straight line, but you expect, maybe you get something like that. And then like that, right, to like close out, right, and then you get your ICL. It undercuts this by a little bit, something like that, and then you're going to get a bounce, and then it's going to be a question: is that next bounce going to be a feeble bounce, and then we're going to get a left translated weekly cycle. Because this was left translated, right? We rallied for 7 weeks and then we declined for 11 weeks. And if this is all part of one cycle, it's actually going to be a much longer decline, not just 11 weeks, obviously. And again, just recap and just thinking about the levels, just being clear. Once we broke down below this pivot here, now we're seeking out $4.75. You know, it's crystal clear, right? Look at it. I hope you can see that. It's like a magnet. And it also happens to be, that's how it works. This is our daily cycle low from the previous daily cycle. That's what happens when you have a long-term cycle decline. You start to break below the lows from previous daily cycles. So 475 looks like, you know, we're headed there like a magnet. And it's really going to be a question. And you can see on the monthly chart that 475 level. Where is that? It's right here. It's the low from October. It's the low that's kind of holding everything up right now, theoretically, right? It's like we had this massive rally. That's what these arrows are, right? Like we had this massive rally since June 2020, you know, more than, what is that? You know, more than 500%, right? We rallied for 26 months. Now we're beginning a decline. We tried to arrest that decline. We tried to stop it with this swing low. It was a swing low at once when we were above here. That's obviously failed now. It hasn't completely failed because we haven't gone below that low, but it seems inevitable we're going to get below that 475 level. And then it's a question of, are we going to be able to stay above this cluster of lows, right? Like below the $4 level, and then you open up 360, which is my ultimate target, potentially sometime in Q1. And so what does that mean for UNG and these other associated stocks, right? Like, what are their equivalent levels? So they're all doing the same thing, by the way. And we talked about this, how you have these little 30% rallies and then we collapsed. So we're doing that same thing. We just had a little 30% rally and then we collapsed. And so we've already broken below the previous low at, you know, $16.30. And so you can see, like a magnet, our first stop would be the 15.5 area, 1540-ish, right? You can see, and we'll look at on the weekly chart. And then on the underside of that, like you really kind of have, this is kind of like a congestion zone between 1540 and around 13.25. And let's look on the weekly chart. That'll give us more significant levels. So again, we're in a weekly downtrend, right? We may get a relief bounce in the next couple of weeks and make a weekly cycle low. But you can see on this weekly chart, right, you have this kind of cluster, which corresponds to those daily levels. That's that 1540 area, right? Like that. And I mean, wow, you have this kind of, and so when we talked about that congestion zone, it's this low here. That was a significant event, right, where we kind of made this big false breakout, and then we came down here and we held that level and continued to move higher. I suspect price is going to aggregate around that level again. That's around 1360. So you could see us getting down to around 1360 as your almost like your equivalent for the 475. And I would say ultimately it's really down in the, what is that, 1180 area. Like if we get the real capitulation kind of washout that I would expect. So that's UNG, and we can look on the monthly chart why those levels kind of makes, right? Like you can see this area here is going to get tested, like, you know, it seems almost for sure. And then do we break below that low? Now, also keep in mind, this thing is just like kind of down only anyway, just by nature of this kind of product. So this isn't helping that the thing that it's tracking is also now in a monthly downtrend as well. And finally, we'll look at Boyle. Let's look at those levels really quickly. Let's just get a sense of what is the potential downside. So again, we've already broken below that level, whereas natural gas hasn't. These things have kind of accelerated. And Boyle is clearly seeking out this cluster of pivots first, right around 2377 in that neighborhood. We're up here at 25. And then looks like it has a date. I mean, that's the thing about Boyle. It's been even more down only than UNG because it's leveraged. And so not surprising to get down to all-time lows ultimately, right? That's at 1705. That wouldn't be off the table by any means. I mean, look at this thing on the monthly chart. Just look at this. I mean, if you like, we're in free fall. We've already, like, we're seeking out these pivots, and then it's a question, I mean, really, of like these pivots here, which are flirting with all-time lows. So that's the story on Boyle, and obviously, again, it's a leveraged ETF. That's what you kind of get. But more importantly, just thinking about natural gas, it's a wild trader, and so you do want to be aware of any potential false breakdown, right? Like what that would look like, and because you get these like moves where you gap up 10%, right? So that's your daily chart. Like, I mean, imagine a candle that does something like that tomorrow, right? Now, I'm not saying that's going to happen. I don't expect that to happen by any means. But we, like, imagine if we got this, right? A big green candle makes a high above here, and then we're kind of off to the races. That's what you kind of need at some point, and maybe we go lower, lower. But that's what you're going to be looking for, right? Like, you would look, and if it's going to save it from this bearishness, you would need like pretty long, like you need big up moves. Just like, okay, now we've taken out this high. This weekly cycle is not declining anymore. Like, imagine if this happened in the next 3 days. This would be day 13, a new high. Now, then ask yourself, how likely is that to happen, right? Now, if it were starting to develop, you'd be ready. You should position for that, be ready, right? But you want to play the odds, and 475 looks like it's much more likely, at least first, right? And then it's a question of, does that hold? Do we get into this kind of choppy area and eventually find ourselves below $4? So that's the update for natural gas here today on December 20th. Thank you for watching.